Hey guys, welcome back to Sharks Academy, and in today's video I want to share with you the weekly market projection moving towards next week. So then again, we are a new growing channel. If you like what you see and you find true value in our content, please hit the like and subscribe button. Otherwise, we will dive straight into the dollar index. So for dollar index, we are still having the same analysis. If you have watched the previous weekly market analysis, you understand that we are trying to buy for dollar index, right, from here into this level of supply, then sell, then buy again. So this analysis stays the same. Okay, we are now currently playing around the supply zone of the dollar. So we are over here, right? And you can see currently we are sitting on the supply. And this gives us additional confluence that the dollar is going low, right? So you want to sell dollar and buy the counterparty. So next up, we have the Aussie dollar. You can see that we are currently bearish overall. We want to be bearish over here and here. So why did I mark out this zone? Let's go down to the 2 days time frame. And you can see this is a supply zone, right? Prices taps in. So now this gives us a reason to go short, right? And track the movements on the daily. We have projection moving higher. We have bullish movement over here. And this bullish movement is intact until prices breaks this low, right? Because this is the low, they created a high. So this is the invalidation point. So the truth is that we can still look for buys over here to go higher, right? And that is the projection for Aussie dollar. Otherwise, you expect this to get ran because it taps into a 2 day supply. We are overall bearish, right? And what we are looking for is this to fail. All of these serves as reaction point to go short when prices comes back up. So let me just touch on Bitcoin since we are experiencing the crash right now. You can see that we have a buy side bias over here. We are still going bullish. This is lots of, I would say, retail support, right? So there are massive people or massive amount of people who are trying to buy over here. However, we have a demand zone here. So currently, we are already at the buy price. All right, so if you are looking to buy Bitcoin, this may be a chance for you to get in, right, at 35,000. And otherwise, we're going to see lower price movements like over here because you can see this is the last break, right? We are ultimately trying to get something involved over here. Perhaps, I would say this, all right? This is the next level. Otherwise, this is the next level, okay? So all of these are potential areas for you to buy Bitcoin. And ultimately for now, this is the best price to get involved. And we'll see a move up towards 65,000 again, perhaps. Otherwise, all of these areas are potential buy points for you to hold. Next, we have the Euro Yen. And you can see prices are delivering bearishly. So if you want to be a seller, where do you want to sell from? Ultimately, I want to try to sell from here, right? So yes, prices taps into some sort of a supply on the high time frame. Let's go and look for it. Perhaps it's on the weekly. So you can see this is a weekly supply, right? We have this buy to sell that taps into supply. And this move should bring us lower, right? So we should be delivering bearishly until prices taps into some sort of a demand over here. Okay, we can use this point. We can use this point. So demand here, otherwise demand here, right? And this should bring us higher to continue this bullish movement. So if you want to see liquidity lows being grabbed, such as this one over here, or some sort of demand over here, we want to see these areas get ran. So study the reaction. All of these are points for us to get involved, to go lower into all of these areas. Okay, so let's go to the daily time frame and see how can we get involved. Currently, we have a demand here. Okay, because using this refined area, right, this buy to sell on the daily time frame, we suspect that prices has the potential to move higher before going lower because we are building liquidity here by means of trend line. So this is still bullish, you can see, right? So prices still has a potential to go higher. And we're not going to guess, right, or just simply place buy limits here, stop loss over here. We don't do that. Again, we are going down to the lower time frame. So this is a daily demand zone that I'm looking to buy from. Otherwise, you can go down to the lower time frame over here on the 4 hours, and you understand that yes, we have a demand over here. So there are two ways you can catch this. First, you go down to the lower time frame on the 15 minutes. Look for the structural shift, okay, by means of wyckoff, by means of a break of structure, or trend continuation on the lower time frame to catch a move into this supply zone. Then this supply zone has the potential to run prices lower because we are still bearish. You can see we are still delivering bearishly. So if you're going to be a buyer over here, you're going to buy into this supply. And what's next? When prices taps into the supply, if you see a failed reaction to create a lower low, all you see is a pullback, then the breakout, you can catch buys to continue higher because now we have a bullish movement. And this bullish movement should bring us into supply zones here or deeper supply zones as we mark out just now. Otherwise, if prices wants to go bearish into this demand, it will go from here, otherwise over here, right? And that's why our take profit will definitely be at this level. So this is the demand zone we're ultimately looking for, and I want to see accumulation happen inside of here to take buys, to potentially move higher into this buy side liquidity. Otherwise, if this demand fails, trade the reaction point. Go to the daily time frame, understand that this is a daily demand. You have to see a reaction, a pullback, a breakdown, supply, get involved. Use the 3-step process over here again. Daily time frame as your high time frame bias. We use the S&D on the lower time frame. We go to the confirmations by means of the step 3 process. Right, go down to the 15, go down to the 5 or the 1 hour, whichever that you prefer. Look for a structural shift, a break, a pullback, get involved over here. And you may be thinking, okay, now if I'm trading on the 15 minutes or the 1 hour, I may not get the best risk to reward, right? Because on the 15 minutes, you are looking for a relatively larger supply and demand. So maybe your stop loss would have been like 15 pips or so. And I know that traders want to get involved in the 1 minute time frame. And this is where you take another step to move into this, right? So let me just paint this context again. We have a daily reaction, right? Reacts off a demand, break structure. This becomes your flip zone, right? This is your 3-step process. Step number 1, daily time frame, we are bearish. Step number 2, look for supply and demand, right? In this case, this is a supply. Let's say on the 4 hours, okay? When prices comes back up, we are looking for a 1 hour or 15 minutes shift in structure. So let's say we see a breakdown like this. So if you were to fire sell limit orders, this may be a 15 pip stop, okay? And I know traders who want to look for maybe 2 to 3 pip stop loss, and this is how you do it. You go down to the lower time frame on the 1 minute, or for those who are working with the seconds time frame, 2 minutes or 3 minutes, doesn't matter. Look for the same pattern over here. Look for the shift, a break, pullback, and now you are probably meddling with less than 5 pips. And this is how you position yourself to find the best RR to go lower. Next up, euro dollar. We are delivering bearishly now, but we are still in an overall bullish over here, right? You check the movements, we have highs, lows, high. So this is the point of invalidation, and currently prices are delivering bearishly, and this will continue to deliver bearishly until we see a bullish movement. So what do I mean by bullish movement? So you can see this is a perfect flip zone. We have a demand, right? We expect prices to actually bounce from this zone or this zone, okay? But you can see both has been broken, right? Then what? This becomes a flip zone. Prices taps in, reacts, break structure. This is a supply zone where you can trade off immediately. If you're a 4-hour trader looking on a high time frame, you can simply place a sell like this, right? And then stop loss above the high and just aim for liquidity lows. This is a 1:3, right? Yes, 16 pip stop loss, but this is a 4-hour time frame, and there isn't any much trade management you can do over here, right? So if you want to go down to the lower time frame, use the 15 minutes shift in structure, and this is how you do it. Right, track the highs, lows, high. Yes, we have a bearish movement, but it didn't break structure. You can see break of structure happens here, right? Make a low, make a higher high. Now what? Break structure, supply zone, get involved. Okay, and now prices came back to the extreme. You can see, and gave us another shift, and this is where you can get involved again. And this move over here should bring us into demand zones here or liquidity lows over here. And this is how you use the lower time frame to get involved in trades. And of course, you can go down to even the 1 minute time frame to look for the best entry or the best risk to reward. Alright. Otherwise, we should expect bearish movement, right, from here towards this demand zone or this liquidity lows over here. And this will remain bearish until prices decides to break structure like this. So you can see with this movement, we anticipated that prices is going to run the lows, right? But if prices fail to do so, prices comes back down, mitigate some sort of a lower demand, right? Or rather, just tells us that this failed to create a low, right? Failed to break and break up instead. Now, this entire movement over here becomes your reaction point. You can trade off the demand here to go long, okay? And this long movement should bring us into higher areas like this. So all of this becomes your supply areas for targets. So to add on for euro dollar, what do you mean by when prices, fail to make a lower low? At this point of time, yes, prices are at the low, but we do not know whether this is going to run lows or reverse higher, right? And that's why we look for clues. The truth is that we do not know whether this fails to make a lower low until it breaks a higher high, right? And what we can do to support our buyers is that if we see an accumulation or a counter break of structure, which means to say if we see a move like this, that break structure on the 4 hours or on the daily time frame, then this has enough bias or enough evidence to tell you that, okay, maybe this supply is not going to hold because we see a change of character over here. Prices may be mitigating demands and continue to deliver bullishly. At this point of time, you know that, okay, this demand may not hold, right? Because we started to form a bullish movement over here. We took liquidity, we break structure, and continue to deliver bullishly. And this may eventually run the highs, right? And we can trade off the last point of mitigation, which means something over here, right? To catch longs. So next up, we have the pound dollar. So let me just remove all of these drawings. And you can see where are we in the market. Go up to the daily time frame. We are delivering bearishly, you can see. Prices are tapping into supply. And with this, we expect prices to run towards the lows. Okay? And at this point of time, we have a low, high, low break of structure. This is a valid demand. So ultimately, our target will be to sell into this demand zone. Right? So let's go down to the low time frame to see what is going on. And I'll mark out the daily over here. So this is a supply zone on the daily time frame. Let's go down to the 4 hours. And this is a flip zone. Let me take a look. This is a flip, right? This is a demand, and this demand should run highs. But when this demand fails to run highs, reacted, break structure, this became the supply zone for us to catch sells. So now you can see prices are delivering bearishly, right? And this will continue to deliver bearishly until it fails. Okay, let me just change this color to black. So now I'm looking to sell here and look for liquidity points inside of this. So now the New Zealand dollar, you can see that we were actually bullish at this point of time, right? And when did we become bullish? We have lows, highs, lows. First sign of bullish movement, right? This is a change of character. We have a pullback, mitigation, break of structure. Now we are bullish. Okay, so we are bullish, and when prices steps into this level, we expect a buy of this area and perhaps over here as well. So you can see clearly of this, we can expect to catch buys, which would have been a runner, right? And based on how you manage your positions, you're going to come out profit or negative. So we do not know how you manage your trade, and every trader is different. So when this fails to run the highs and instead breaks down, where is the low? High, low, high. The entire leg over here is valid for buys. And when this starts to break down, we are going bearish. Okay, and we are ultimately going to run into this level. So we're going to expect a pullback into supply zones to get involved in shorts. Okay, and this is a demand, right? Prices step into demand. When this fails to create a high and breaks down, you're going to trade the supply and demand flip, right? This is a supply flip. We're going to look for movement over here. Distribution, go lower. Now over here, we have the dollar Canadian, and you can clearly see that we have a demand here. We are buying near the lows. We have a change of character over here. So let me just remove all of this again and track the highs and the lows. At this point of time, we have a low, high, low, high. So the truth is that you have caught a buy movement over here and over here, right? And this could have earned you money. The prices came back down, liquidated this low, and we are going to re-evaluate again, right? Where is our highs and our lows? So at this point of time, highest point between the two lows. So this is the break. Prices just broke structure. Where are you looking to buy from? Two areas. You're going to buy from here and you'll buy from here. So this is the extreme, right? Prices can tap into this level, give you some sort of reaction, fail to create a higher high, then go lower. But this isn't a break of structure because this is internal structure, right? Your bullish leg is still this level over here. So yes, you can catch sells, right? You can catch the sell movement into this demand to go higher because this is eventually bullish. Okay, so this is pretty clean, right? Again, lows, highs, lows, highs. Break of structure, okay, or change of character over here. Two areas of demand. So this is still based off the 4-hour time frame, and you're going to use the 3-step process inside of here and inside of the entire leg. So go down to the lower time frame, 5 minutes, 15 minutes, 1 hour. Look for the structural shift. Look for wyckoff on the 5 minutes or the 1 minute whatsoever, right? Take the pullback for longs. Similarly over here, right? Break of structure, pullback, get involved over here. Take one step further. If you want to look to the lower time frame on the 1 minute to look for the structural shift, same thing. You can look for wyckoff on the seconds as well. You can look for S&D flips on the lower time frame to catch longs. So next up for the USDCHF, we are pretty much moving sideways over here. And let's frame the entire bias again. We have a break over here. We have our demand zone over here that prices mitigated perfectly, right? This is a huge move. So when this prices break structure over here taps into this demand, we expect a move up into liquidity highs. okay, or some sort of supply inside of here, because you can see prices did this and then leaving behind a supply, right, where prices taps into. So now we expect a bearish movement into deeper areas of demand. Maybe over here, you can see this is the last point, right? So now at this point of time, we are bearish. Over here, we are bullish. Over here, we are bearish because prices, yes, change the character, taps into supply zone, and we expect a run into demand zones here, perhaps. Okay, so the truth is that you can continue to buy over here. Otherwise, you want to buy at the lows, at this demand area. Both are valid, right? Because if you were to place the entire framework like this, you are still going for bullish movement. And this bullish movement should get mitigated over here and over here. So I want to see accumulation happening. I see accumulation happening. So let's play with the weekly. And you can see this move came from this demand over here, right? And this supports our buyers. So with this, we expect a bullish movement, right? It may not be from here, right? Because you can see we actually tap into a daily demand over here initially. And with this, we expected a run higher. So when this fails to create or input a high, we expect a deeper mitigation, maybe over here, right? But this should get ran. Why? Because this is now delivering bearishly, right? You can check the movements: high, low, high, low, high. If prices breaks this, we're going to expect a run down into the origin, right? This is the break of structure. This is the demand zone. We expect a move from here to go higher. Lastly, we have the dollar yen. You can see that we are bullish. We have a liquidation over here. We have a break of structure. Demand zone is over here and over here. So now prices already tap into our demand. We can expect a bullish movement from here, right? Looks bearish, but this demand hasn't failed yet. So let's go down to the 4-hour time frame. You can see the last point of defense is over here. This is the last demand area, right? So we can expect bullish movement from here as well, if this area over here decides to fail. So can you see that prices are actually delivering bearishly, right? And if this continues to deliver bearishly, we need to wait for a pro trend. We need to wait for the 4 hours or the daily time frame to be bullish again before we take buys. Why? Because if prices were to tap into our demand and we are looking for a 1 minute shift in structure, this 1 minute shift can happen multiple times, right? This can happen 5 times. And if you are able to take 4 to 5 losses in a row, then you can look for 1 minute shifts over here. Otherwise, you want the higher time frame to be in line with your larger structure, right? You want the 4 hours or the daily time frame or even the 1 hour time frame to be in your favor. Then this is where you use the 3-step process, because now you have a H4 bullish, right? In line with your entire framework of bullish buyers. We have a demand here, step number 2, right? And step number 3, again, look for confirmations, demand, get involved. And whether you want to take another step forward to use the lower time frames to get involved is up to you. And otherwise, we can expect bullish movement from here as well. So let's go and take a look. We have a demand area here. Yes, we have a break of structure here. We have demand area here. So now you can see on the 4 hours, again, prices are delivering bearishly, right? And this will continue to deliver bearishly until we see a break of this level. Okay, so depends on how you manage your trade, because for me, I went down to the 15 minutes to look for a buy opportunity, because at this point of time, prices taps into demand, right? We have a H4 break of structure. We have a demand over here. I went down to the 15 minutes time frame to look for a shift. Can you see over here? Lows, highs, lows, highs, lows. Break of structure, right? Or change of character, right? We have a break on over here. We have demand zone over here. So this is where I actually place a buy limit like this. Stop loss beneath this low. And I targeted this 15M supply because I understand that prices are delivering bearishly on the 15M. So I took partials inside of here and the rest got ran. You can see over here, right? So this is how you manage your positions. You understand that on the 4 hour, yes, we are still bearish, and this has to break supply zones, right? We need to break supply zones in order for prices to move higher. And in this case, our 4 hour is bearish. The pro trend for the 4 hour is bearish. Yes, this is the 4 hour break of structure. This is a bullish movement, but this is a bearish movement. We want to see a break, pull back, get involved here to go higher. So that marks the end of the weekly market analysis, and I thank you for your support. I thank you for your viewership, and I appreciate your comments. So for those who have better ways of how we can improve our content on a daily basis, please drop them in the comment section below. Otherwise, I'll see you in the next one.